Ladies and gentlemen, welcome to your place for news, sports, entertainment, fire optics podcast. We are here today because some special events went down yesterday involving stocks, involving people getting a come up, the common folk, the common man getting a chance for redemption against the man, and only to have it the rug pulled from under their feet. And I don't know what the hell is going on. I'm just sitting at home. I see Robinhood. I'm like, damn, are they coming out with another version of that movie? I don't know. Then I start seeing a little bit about the situation, talking about it here and there. But if you're not in the know, it's going to go straight over your head. So before we begin, please like, subscribe, all that good stuff. Click it. We're going to be coming up with some fire stuff every week. My name's Kensei Nick's old son, James.
What's going on, fam? James, artist.
So guys.
And my brother Rishi.
Hey people, let's learn some stuff. Let's do it.
There you go. So typically I kind of lead the show and whatnot. This time we're going to do it slightly different, where it's going to be more, I'm going to ask some general questions, and I'm just going to let these dudes go at it with their knowledge and their resources. I'm not going to say exactly what these gentlemen do in life, but I am going to tell you, like, these are two very qualified people to be talking about this, like degrees and shit, people. All right. So, gentlemen, in layman's terms, let's just begin there so we can get a nice little floorboard. Rishi, what the fuck happened yesterday?
You want to start, James? What do you want to do?
Well, first let's lay the ground rules first. Well, let's just introduce who this man is right here, Rishi. He's a Goldman Sachs, ex-Goldman Sachs employee, School of London economics, and owns his own hedge fund, or did own his whole hedge fund. So he's more than qualified. I am a entrepreneur investor, flip houses. I buy gold, silver. So I've been trading for about 10 years now. So we have a little bit of understanding of what's going on in the market. So let me start this for Rishi, because he's gonna have a good expertise on this, and I'm just gonna do it I'm just gonna dumb it down what happened, right? And then I'll let the stock market expert dive in on it, right? So basically, in a nutshell, Robinhood, if you don't know, is a platform or an app that allows you to trade or sell stocks, and they're into kind of like this wave right now of this type of companies coming up. Webull, Stash, who the other ones? There's a couple of them out. There's 4 or 5 of them out there that you can just, go on and fractionally buy shares, right? Now, I want to lay the ground rule out from the beginning. This happens all the time. What the problem was with Robinhood was they hit a stock that feeds a certain market that has a lot of YouTubers, streamers, Twitchers, whoever who can come out immediately and express their disdain, right? Because these are gamers, right? And so the reason why I say, and I'm gonna let Rishi hit on it in a minute, why I say that this was bullshit on Robinhood's part is because they don't own the ticker or the stock. This stock is on the New York Stock Exchange. So if the SEC or the New York Stock Exchange didn't have a problem with it, I don't know why Robinhood does, unless they have investors that own their company, which I'll let Rishi get to in a minute.
I was going to say, which we saw in an interview with Cuomo that they do. Okay, continue.
So I'll let Rishi speak from the hedge fund perspective, because I don't know that perspective too well. Okay. So when I look at it, I'm saying, well, this is a valid, the volatility is valid, because if you look at Apple when they come out with a new iPhone, right, their stock bubbles, right, because purchases are happening. Well, what happened with GameStop last quarter? The new next-gen consoles came out, PS5, Xbox, and all the accessories with games. So what happened was the gamers, that's why you saw the kid on the news with his game headset on, like, yo, this is bull. All just had the epiphany together to say, I'm gonna buy GameStop stocks because people are buying up, next gen consoles. It's valid. That's why the SEC, the New York Stock Exchange, and the major brokers, none of them had a problem with it because it validated the surge. Now, do I think 61% is a little high? Yeah, but the market always corrects itself, right? Now, on Robinhood's end, their investor or their hedge person shorted the stock, GameStop stock. And so that's where the problem came in. And for those of you who don't know what shorting is when you're betting that the stock drops. So you're putting your money against the stock's gain. And if the stock drops, you make money. But if the stock don't drop and the stock goes up,
you got to have the money in hand to make that.
To make it up.
So this is a lot like trading places, right? No, for real. Like to make just to make an analogy real quick. I'm not going to disrupt the flow of the conversation, but isn't that like the end of that movie where shit went up and they didn't have the money to cover for it? It's the same kind of principle.
Same principle.
Okay.
Yep. But except this time it's not Hollywood; it's real life, and they owe them money. So if I'm a hedge fund, and I'm just talking theoretically here, I'm gonna tell Robinhood, yo, stop. Every time somebody buys, I gotta pay because the stock is going up, and I need it to go down. So, in layman's terms, the little guy took it to the big guy for once, and the big guy couldn't handle it.
So one question before we move on: why yesterday though?
Well, it started on Monday.
Yeah.
Gotcha. Okay.
It's been the story's been building to the point where now it's like everyone. My Uber driver was talking about it. It was it's big. I mean, it's infiltrated the media news cycle for this whole week, and especially yesterday. But no, I agree with what James is saying. I think his breakdown is correct. The way that I see this is this was a perfect storm for this to happen. You had what was it? March, April, the COVID lockdown. You got people that are bored. You can't bet on sports. You got like Dave Portnoy at Barstool Sports becomes started a hedge fund, on the spot, and he did well. So you have, I think the numbers are, you have from March, you have Wall Street Bets on the subreddit. They went from 800,000 subscribers to 5.1 million from March till now.
Okay, pause right there, because that's one part where me personally, I'm a little bit confused, so I'm sure somebody else out there may be. When you say subreddits, you're saying subscription, which is funny, inside joke, which is saying subscription to Reddit, subscribers of what particular, subscribing particularly to what on Reddit?
Wall Street Bets is a subreddit.
Gotcha.
And so at the same time, that subreddit went from it had a similarly meteoric rise in subscribers, right? So these are all catalysts that create the storm that happened, right? So then you have the fact that the big hedge funds, they basically saw the end of GameStop because I personally have not been to GameStop in a long time. I haven't bought anything from there in a long time. Everything's online. But so the hedge funds saw that, and they went short 140% of the shares outstanding. So let's say you have 100 shares. How do you short 140 shares? That means that there's an imbalance there. So these guys all have to buy the stock back. Once they short it, they have to buy it back. But to be able to short it, they have to borrow a ton of money at high rates. And if the stock goes against them, which is what James was saying, if they basically lose money. And if they are if they're long options, they have to, sorry, if there's short options, they have to rebalance their options model every day by delta hedging, which means buying more stock. So you got all these things pushing the stock up.
Okay.
And I mean, I don't think it's worth the price it's at now, but at this point, people are trading on speculation. But the point is Robinhood, right? So Robinhood, let's get Robinhood straight. It's a free, commission-free brokerage service, but it's not free. We are the products. They sell our data to the hedge funds that fuck them, that fucked us. Citadel, Melvin Capital, we sell our data to them.
They are investors in Robinhood.
Yeah, exactly. So they're investors, but there's a business linkage that's not just investor based. Like you need these people. So where does the brokerages, they have to buy it from somewhere, right? So they have to buy it from the clearinghouses and this and that, or from banks or from other market makers.
Yep.
And those other market makers, the big hedge funds or the banks, they have customers that were a part of the big short of GameStop, and they're more powerful people. I mean, that's just a fact.
Yeah.
So somehow they were able to convince Robinhood to basically shoot themselves in the head because they're not going to survive, just so that they could stop this rout. Because apparently, like if a billionaire goes from being worth 1.5 billion to 800 million, they get really butthurt. Like it really affects their lives. So it affects their emotions. But it's a scam. And I want to make one thing clear. This has been happening the other way for 100 years. I mean, every stock that we trade every day, this is the way it works. You're bullying people with money because, when you keep buying, I mean, when you have enough gunpowder and enough bullets, you can change the valuation of a stock to make it.
Why did you say Robinhood is done now? Is that based upon their reputation can't sustain what has happened now?
Yeah, I think that a lot of investors are learning that they were the product, number one, and number two, a lot of people, they got burned, man. Like if you wake up thinking, like I was saying in the chat, if you go to sleep thinking that you were up 200 grand, and that's a shit ton of money for a lot of people, and it is for anyone. So it's like, and then you wake up and all of a sudden, the market's tanking because you can only sell. It feels like injustice, and it is injustice. But this time, it was a big deal because of social media and the fact that all these people got involved. And the only way that they were able to move the market against the options that the hedge funds had was because they all coordinated together to build up enough money to fight the money fight.
Okay, before we because I want to go directly into that, like what prompted this move to set off like this. But before we get to that question, because that's to me the most important part of this whole thing. So it's safe to say that these guys who decided to get together and make this move should have done more research on Robinhood and see who their investors are. So what I'm saying is, like, in the future, if you want to go this route and get a whole conglomerate to make a move, should you figure out before you go through a certain investment app or whatever, let me see who their investors are.
No, I mean, that's a good point. I think the Reddit and the subreddit and like the Wall Street Bets and I think there's like Stock Twits or a couple more, their influence is growing. And when you have 5.1 million subscribers, and who knows how much money each of them have. And you also have, let's be clear, there are also hedge funds that were on that side too. So it's not like black and white. It's a mix.
And on Reddit, are these like communities where they're constantly communicating with each other? Is that what Reddit is for? To go on there and just chit chat with each other?
Yeah, for all kinds of different subjects. But this situation started with Yahoo Finance message boards. That's where it all began.
Okay.
We were just like pumping and dumping. Like they're like, oh, you got to buy this, and it was kind of like amateurish.
Okay.
The evolution of that. Sorry, stock twits and Reddit were the evolution of that to more nuanced and sort of educated, knowledge-based opinions on stocks. Because if we're being honest, like since the democratization of stock investing since '98, and the way that the internet has blown up, everyone has access to a lot of knowledge. So some of these guys are not amateurs. They're smart. A lot of them are smart. The main guy is smart. So what they did was they got together. They had these ideas, and they saw the fact that so some of them fundamentally actually believe in the stock, which I don't really at that, especially at this price. But some of them, they saw that these massive funds like Citadel and Melvin Capital were so short that any kind of movement upward would cause a margin call and cause them to delta hedge, and it would move the price up. Short squeeze, basically. So they're squeezing you on the stock and squeezing you on the options. On the stock, it's you just have to buy to cover your options contracts and delta hedging and gamma hedging. But they figured this out, and this is a technical thing. This is just a flow of money. Like they have to get paid back. They have to buy back the stock, which puts a bid on the stock. And but if the buyers, the guys from StockTwits and Wall Street Bets and Reddit are moving it up, these guys are forced to sell. Forced to buy.
Yep. You got to honor those contracts.
Yeah.
Or
else they're out of business. So when you get a lot of players, like big players involved, and they all like have these messy little connections with Robinhood, you can see that there was something fishy going on. Because this is unprecedented. I've seen volatility stops in NASDAQ or Dow Jones, whatever. If things move too crazy, there's circuit breakers. Like when it goes up 1,500 points in one day or blah blah blah. But this was different. This was one or two companies like Robinhood that did this, and it's unprecedented.
Yeah.
But the fact that they were willing to take that risk and do that, even though they knew it was going to crash their IPO, ruin their business, means that they were getting assurances from some other people.
Yeah.
I think.
So there's a lot of scratching going on, huh? Everybody's
when there's that much money.
It sounds like a stock orgy.
But when you look at it, it wasn't like a concerted effort from the Reddit feed. Because if you're on Reddit, right, and so you're a gamer and you're looking at a game, I think one of the big stories was that one of the developers for a game was talking about it to the community. You know what I'm saying?
Okay.
Yeah.
So if you're in the community trying to find information about what's an update on the game going to happen or something like that, and you see that, you're like, oh, I'm gonna go my Robinhood account and I'm gonna buy some of this stock. You know what I'm saying?
Yeah. At $4, it was at $3.96.
Yeah.
On July 27th. I'm like, you know what? They got a new CEO. Maybe they're gonna pivot to whatever online, or just have some other revenue streams. That's a good buy. But at $400, no. But there were, at that time, initially, there were fundamental reasons that it went from 3 to 7 and 3 to 8.
Yeah.
And that was based upon the conversation that you guys had at the beginning of this pod, whereupon the pandemic set in motion.
Yeah.
So that's what I was going to mention. It was the fact of what James said before, the new councils coming out. Like 3 new councils came out last year, and then you had the pandemic on top of that. So now you're talking about your regular video game systems and video game sales probably to the exponent of 7 or 8, like literally.
Yeah.
Sales probably went like that. So there is that inherently why that initial increase happened, and then is this a gradual thing from July until now?
Yeah. So GameStop is the most seasonally specific company that exists, I think, because all their sales, the majority of their sales happen around Christmas. So leading up to that, people were starting to bid it up. There was a new CEO. He's an intelligent person. They didn't think it was worth $396. They also saw that the funds were way too short. They're like way too short. And it created this, it really created a perfect storm because everything just came together for this to happen. Social media, COVID, boredom, gambling addiction, because like the people that were betting on sports, they just pivoted to a different casino.
Yeah.
So here's where I'm confused. I'm sorry to cut you off, Rishi.
Yep.
So are you saying that what's the stock at right now?
Say like 3 something, I don't know. It's really volatile. It's moving up and down 100 points like every.
But you said it's at 3 something, like 300 something, or $3 and something.
No. It's like it's definitely above 280, I think.
Yeah. Okay, and and in July it was 350 or something. Is that what you said? $3.50,
96
and now it's 280. Okay, now here's my question: are you saying that it went from $3.50 to 280 because of the pandemic and everything that happened, or was it because all these dudes in the Reddit page and their leader decided to jump on this stock at one time? Like what?
I'm saying that it's a combination of all of those factors.
Yeah. Okay.
It's up $83 now.
What? Since when?
Wait, what is it?
Talking. It's plus 81 now.
But what's the price?
Plus 77. So it's 271 right now a share.
Okay. Yeah, but this morning it was like 350.
Yeah.
Because Robinhood said, okay, you guys can go back to buying.
Oh, so when these guys decided on Monday that we're gonna go out and start buying all these shares, the price was then?
It was in 300, some of that, wasn't
it? When they started the concerted effort to buy, that was.
It was at 413. Its high was 413.
Okay.
No, I'm talking about the. You're talking about the when did the investors, the guys like us, or the retail investors, get together and jump in?
Yeah, one of those Reddit guys who were talking on
that was $230 ago, I think.
Okay, and so the reason why they decided to all jump in, even though it's $230 a share, and to me that seems like a lot.
No, I'm saying $230 a go.
Yeah.
Oh, okay.
So it was only like 100.
The machine started going, and it became a circular thing where now the hedge funds have to keep buying.
Yeah. Okay. So that was their plan, though. They knew that these dudes they didn't have the capital to keep up with the bidding that they were doing, and that was them over. Yeah. That was their plan?
They didn't know that, but they made a good guess, and it worked out.
Okay. Really?
What was when they paused trading, it allowed a hedge to do what everybody else was doing.
Gotcha.
You see what I'm saying? So they needed that window to correct their action, which is wrong, which is illegal.
And there's another facet to the story, like these option contracts, they expire, right? You have a right to sell or buy a stock at a certain price up until a certain date. That expiry was today, last night.
Yeah, it's probably every Friday or something like that.
Yeah, so like that kind of money flow advantage, where you assume that they're going to keep buying to cover their shorts is no longer there. But now what you're seeing is the hedge funds are the ones that are switching to the long side, just to chase it. Yeah. Since Wednesday. If you look at net flows, retail and professionals, the professionals are more long than the retails were. But that's also because they're short covering. So
Now, if I was to get in on it, I would short this stock right now.
yeah,
I
it's
would.
just dangerous. It's dangerous though because I would short it, and I think it's worth maybe like $20.
Yeah.
But the problem is when you have a cult stock similar to Tesla, it can keep going up because it's not connected to reality. It's connected to just people's emotions.
But if you short it on the option,
If you shorted at 250 like today, James, and what if they go to 350 tomorrow? That's a margin call.
yeah.
And that's bad. I mean, that's not worth the risk. Right?
But
unless you have a shit ton of money.
You can hold that option for 2 or 3 weeks.
Yeah.
You know what I'm saying? It's gonna bottom out. It can't.
It has to because the one of the main factors is gone. Or else actually no. Actually, so I'm hearing a lot of shit. So the funds apparently they doubled down on their shorts.
Yeah.
So they're basically a part of the whole game. It's not this little guy versus big guy narrative that everyone thinks it is. Maybe it started as that, but everything adapts, and now it's just this big hodgepodge of people trying to make sense of what's going on.
So that being said, where do you think this will go from here? I got 2 questions for y'all to wrap this up. Where do you think this will go from here? Over the course of the next week, 2 weeks, a month, what's going to happen?
I'll just say we live in a democratic run country now, and you're already hearing stuff from Pelosi and AOC about this. They're going to have some kind of regulatory move to do something.
Mm-hmm.
I'm pretty sure that's going to happen. And
wait, is that going to screw us over? Basically, is that?
No, they're going to create laws just to create laws, but this is a good reason to create a law in their minds. So that this can't happen again. Is that what they're going to do? The thing is, it happens. The thing that
it happen no matter what.
It happens every day, but we're the ones getting fucked.
That's what I'm saying. Are they going to try to make sure that the regular dude can't capitalize off this again? Is that their plan?
I would have to know which lobbyists are working for who.
That makes sense.
It's not going to be so it doesn't happen again. It's going to make it tougher for them to make that decision again.
Yeah, and it's going to change retail.
Tougher for Robinhood to be able to make that decision again. Because they weren't supposed to be able to do that in the first. So Pelosi and AOC are trying to look out for the common man if that's the case, because they're not going to allow.
And they're also jumping on a big media sensation thing, which
trying to gain some points.
It falls into their narrative.
Yeah.
So the whole thing's crazy, man. I think people are going to stop trusting these no fee.
I don't trust
and go back to the $7 a trade brokerages.
Yeah.
But either way, they're all selling your data.
Yeah.
And they're making more money off that than from the fees.
I mean, to me, is always best. And to answer your question, I think there's still some life left in GameStop just because you still can't walk into a store and get a next gen console right now, right? So they're still selling out as soon as inventory fills up. But eventually, around March or April, you're going to see GameStop go back to its original, formation or whatever. So, my advice, and this is my advice, and this is what I learned is, and like Rishi has said, if you're not paying commission for your trade, you might not want to be trading with that company, right? Because basically, I trade on TD Ameritrade, right? But I know that they're going to follow SEC's guidelines to the fullest, right? But they're big enough to handle shit like this.
Yeah.
You see what I'm saying? Even though they may have 8 or 9, 10 hedge fund investors in them, I don't know how TD Ameritrade is formed. I just know that they're big enough to handle.
It's massive. It's a massive operation.
You know what I'm saying? You looking at these little mom and pop, I call them mom and pop, but these little apps that Acorn and all of them that you can invest in, they just don't have that
They
capital.
can't handle it.
Right. So to me, I just don't do it because I ain't a hedge. I don't got billions of dollars just to waste.
Also, these mom and pops, like Robin, they put themselves as being mom and pops. They put themselves in a position to need money from the bigger guys, and then that creates all these conflicts of interest.
Yep.
Yeah, which Vlad could not talk his way out of today, or whatever that interview was.
There's no way for him to. He can't do talking points, but he makes no sense.
WWB. That's what he sounded like.
Yeah, you get a man who's 20, 21, 24, 25, and they look at their count, they're like, oh shit, 8, 9, 10. That's a lot to a kid.
Oh, yeah.
Year old, you know what I'm saying? To an investor ain't nothing that's hedging, but somebody who just came up and made $6,000, man, especially right now, that changes the perspective of a lot of things for people. And for Robinhood to be like, no, that's fucked up.
That's a good point, because some people did make money and some people got screwed.
So when was the cut? When did they officially cut it off so you couldn't buy anymore?
Yesterday midday, I think.
Yeah.
And they just put it back on today?
Yeah. But there's a story about this kid, like he's 6 years old, and he
is his name Timmy? Please tell me his name's Little Timmy. They're gonna eat that up. Jimmy. If it ends with an E, he's gonna be set for life.
No, it was like a Quan, or it was a little black kid.
Yeah.
We're gonna take care of him then. Okay.
Dude, he used his birthday money and bought some stock when it was like at $4, whatever. Like a couple years back. He's only like 8. He made like $3,500 off of it. And that's going to teach him to pay attention to this stuff. And it's going to increase his financial literacy for the rest of his life.
My dad tried to do that for me on my 10th, 11th birthday, but he bought shares of Joe's Crab Shack.
No, I mean, definitely. This guy made his kid decided, because the kid was like, you know what? I love video games. I go to GameStop all the time.
That's wise. That's wise, man.
Things that you actually use. That's my advice. Invest in things that you use every day.
That's how my kids are, man. They all got their own TD Ameritrade account. It's under my name, but they go in there. I put a couple $100 in there every month. They love the Nintendo Switch, so they buy their stocks and whatever.
Yeah, so this 8-year-old kid, he's cashing out two G's.
Yeah.
And he's keeping the rest of it to invest in other stuff. So this is a part of the learning process for a lot of people.
Yeah.
That's awesome though. That's
the upside. The downside,
real life experience, homie.
Trust in these apps.
These kids will be making more than us than we ever did soon.
Yeah.
That's what's up though, man. That's good. That's gonna really accelerate the motivation, specifically the intrinsic motivation to want to learn, which is, as an educator, that's what you always want for kids. You don't want to motivate them after a while. You want to teach them how to motivate themselves and what's going to get them going. And if I'm an 8-year-old kid and I find out something I'm interested in, like, because every year these toys come out or whatever, what if you see this story, you're a kid and you say to yourself, okay, the next time a hot toy is coming out, like kids have their kids know what's hot, or excuse me, not kids necessarily, but the streets tend to know what's gonna bubble up before the actual media does. So what if you are a little urban kid? You say, hey man, like the little fidget spinners. What if you caught that for the wave? Like, yo, I'm gonna invest in these fidget spinners, and then 6 months later, boom, I'm gonna sell. Is that possible? Just to try to.
Yeah.
It's a good start. But I don't know if there's a market for fidget spinners anymore.
Not anymore, but I'm just saying, like, in general, like, is this something? Yeah, the theory behind it, exactly.
Yeah. It'll. So here's the thing. One of the best catalysts for learning about this stuff is being on the winning side. So that kid was on the winning side.
Exactly.
Now he knows it's in his brain for life.
Yep.
I mean, if you could teach them about the risk, like I teach my kids about the risk, or like I show you guys when I buy companies that are pre-IPO, right? So I'm investing in a company before they even go to the stock market, right? So I'm basically buying a piece of the company, so expecting it to go up, and then that way I gain value when it does. And so I showed my kids this. I said, well, this is not a guarantee thing. You know what I'm saying? I'm not looking for this to be making me a return this year. But 2 or 3 years from now, when this company, I think this company is going to be a valuable company, I already own it.
Yep.
You know what I'm saying? And then that's when you make your money. But the company could fizz out. The company could not, what you call it, grow. And then next thing you know, I lost my money because once you put your money in an investment, you don't get it back.
But that's why you evaluate your own portfolio, your own banking,
Right.
and you determine what is the risk that you can take that's that's worth investing, but it's not gonna hurt you that much.
Yeah. This goes back to my point. The democratization of information,
Mm-hmm.
it's good for everyone. I mean, like, you don't have to be a Wall Street banker to know Wall Street banker shit. You just don't.
I make a pretty good amount just off of option trading.
See, and here's the thing: can everybody eat, and it's gonna be okay?
No, it's not.
No.
Yeah, usually it's us that gets.
No. Wait. My bad. Hold on 1 second, James. I don't mean in terms of. I'm speaking almost theoretically again, where not I know what these big companies and hedge funds, I know what they're going to allow, which is not that. But I'm just saying in general, could everybody be investors and it would be okay?
I don't think so, because this is what I had to learn about investing in the stock market. It's not my money against the institution. It's my money against your money. You know what I'm saying? So I'm not really like investing against some operation. I'm investing against what you're investing in,
including all those other guys.
Including everybody else. Mm-hmm. And for everybody out there, I want, because that's a hard lesson I had to learn, right? Like, I had to understand how stocks move, and before you do any investing, that's what you need to really understand is what makes the stock go up and down. So, like he said, stock Twitch and all that stuff. If I go on stock Twitch and I see a bunch of people talking about stuff, I'm probably going to go the other way with it. If everybody's saying buy, I'm probably going to short that stock. You see what I'm saying? Because it's just too much momentum going one way. It has to come back down sometime. I just want to catch it.
You got to catch it early. You try to catch everything before it actually happens.
Yeah. Now, in a perfect scenario, everybody should be able to eat if you was buying a stock just on the company's merit. You know what I'm saying? Like, if I bought a stock and there's nothing else, no forces against it, I'm just buying it off of what the company's going to do, good or bad.
Yeah.
Yeah. But I'm buying it off of this person thinks it's going to go bad and I think it's going to go good. Yeah. So it's that tug of war. So that's why it's how everybody can eat.
So it's kind of a zero-sum game.
Yeah.
Some people lose, some people win. But yeah, you're right. I mean, it
sounds a lot like fantasy football.
It's nothing different than.
It sounds like daily fantasy, where if I may not take this quarterback because I know everybody's going to take that quarterback. So let me take Kirk Cousins because if he goes off just as much as they do, then I'm the one that's actually got the most property of it. Does that make sense?
Yeah, let me give you a daily fantasy analogy just to supplement yours. So say you have 30 entries in a daily fantasy NBA for tomorrow. But there are 30 other guys that have 500,000 entries each. I mean, there's one of them's going to win just because they have more capital.
Gotcha. Yeah. That makes a lot of sense. Yeah. There we go. We got bringing that fire to you now. Be straight up. Come on now. We brought the ignorant novice, the midway expert, and the full expert all for you.
You guys are not novices, man. That's bullshit.
What'd you say?
You guys are seeing this stuff. We're all seeing this stuff in real time. experiencing.
Yo, but hey, man, I don't know about the audience, but I had no idea what the fuck was going on, really. Like, now I understand the intricacies of it, because as a novice, seriously, from the outside looking in, unless someone literally did what you just did, what you guys just did, and break it down piece by piece, that's why, like, that thing about how what happened earlier this summer is connected to, and the pandemic is connected to, these Reddit users and them deciding that they're all going to invest in all this because it's going to double back down and they won't, all this stuff. Like, if you just hear it, it's too much. So you come to Fire Optics to get fire breakdown. You feel me? That's what we do. Peace. Oh, my bad. Like, subscribe. Kensei, Nick's old son, James, Rishi, we're out.
Yeah.